Have you ever wondered how traders can handle six-figure accounts without risking their own savings? Today, I'm going to simplify everything about prop firms, what they are, how you can benefit from them, and critical mistakes to avoid. As account manager handling plus $2 million FTMO account, simulated account portfolio for our clients, I've guided numerous investors through this journey, so stick around. By the end of this video, you'll have the clarity you'll need. So let's start with the prop firm itself. A proprietary trading firm or prop firm traditionally allowed traders to use company funds to trade financial markets, typically at banks or hedge funds. Nowadays, virtual prop firms have become highly popular and accessible. So virtual prop firms offer traders large accounts to trade with after successfully completing their evaluation phases. Common firms are FTMO, you might have heard of TopStep or E8 Markets. In the United States, you also have maybe Apex that is known from the US citizens. So those prop firms provide structured challenges to test your trading skills before granting you the funded account. Imagine trading 100K account without risking your own money, but keeping most of the profits. Sounds great, innit? So let's break down exactly how these challenges work. So typically, prop firm challenges involve two stages. Phase one usually requires hitting a profit target around 8 to 10%, while without losing, 5% on a single day and 10% overall, which is the rules of most prop firms. For example, with FTMO, a 200K account evaluation might cost around $1,200. You need to achieve a 10% profit within the time frame you want to and avoid the daily limit of 5% and the 10% maximum total loss to reach the objective. So once successfully done, you pass to phase two with a lower target, usually half of the initial requirement. So if you had 10% on phase one, usually you'll have 5% on phase two. And if you had 8% on phase one, usually you'll have 4% on phase two. After passing both phases, you receive a fully funded account from the prop firm, and now you're trading with real capital in the sense that profits are typically split 80% in your favor and 20% for the prop firm, where you keep 80% of the profits generated on these 100K virtual accounts. So most prop firms also refund the initial evaluation fee after your first payout. So you can recover technically the 1,200 already invested in the 200K scenario we've just mentioned. The benefits of trading with prop firms are clear. They gave you access to significant trading capital, multiplying your earning potential significantly. So for instance, that's the traditional comparison. That's the traditional example you might have seen in other videos. Making 10% profit on your personal 1,000 account would yield you just $100. However, making same 10% profit on a funded 100K account would earn you $10,000. Moreover, prop firms enforce structured risk management, protecting both you and themselves in the sense that you put down a challenge fee, and that's all your risk. You don't risk more than the challenge fee you've invested if you just take the challenge like that. So this setup is ideal, especially if you lack substantial personal capital. So selecting the right prop firm is also crucial. How to choose the right prop firm? That's a good question. So here are three essential criteria. First, reputation matters most. Always check platforms like Trustpilot and communities like PropFirmMatch to assess a firm's trustworthiness, if I can say, to assess a firm's solidness. That's something very important. The top firms in the industry can get 4.8, 4.9 score on 5 for Trustpilot score. So that's very important. You might have seen our tier list video. If not, you'll be able but stay until the end of this video first to understand fully what are prop firms. So the second point will be to consider the profit to drawdown ratio. Firms with reasonable targets and larger allowed drawdowns are easier to succeed compared to more tightened rules. So, for example, FTMO is the standard. They don't have the best ratio, but still, since the first point is more important, that might be the company you choose. So that's why the third point would be on those 3 points, the price points. Avoid firm, I would say, offering challenges drastically cheaper than the industry norms. So because this could signal instability or scams. Typically, firms offering 50% discount on some accounts. I wouldn't recommend that. Speaking about this, how can we avoid scams and red flags in this industry? Unfortunately, the prop trading industry has some scams, and here's how you stay safe. So beware of firms promising unrealistic profits or unlimited high frequency trading without clear restrictions. These are major red flags. Always verify how long a firm has been operating. Firm established for multiple years are typically safer. The standard being FTMO, the benchmark in the industry since 10 years this year. Most of them, the one you can trust, have been here since 3 years at least, something like that. So look for transparent leadership, companies with visible founders and clear accountability, usually demonstrate integrity and reliability. Where you see the founder, I mean, and you see clear accountability about what they're doing, that's a proof of solidity. What are the realistic expectations in this industry and success rates? We can ask ourselves. Here's a sobering statistic. Only about 5 to 7% of the traders pass prop firm challenges. Even fewer, less than 2%, consistently earn and maintain profitable payout. So this underscores the need for a disciplined approach and consistency strategy. It's crucial to extensively practice and refine your strategy on demo accounts before risking money on evaluations. Realistic expectations and strong discipline greatly increase your chances of success. But you should know that we at Exo Capital offer a solution for you. Keys in the end, that's a passive income solution. So if you don't want the hurdles to do all the work yourself, you spotted the opportunity but don't want to spend hours working on that, we can provide the skills and the time. If you're interested, check the link in the description to know more or to directly book a call with me. I'd be glad to discuss this further with you. We'll cover how we can make $20,000 per year with a 200K account. So that's in your pocket. That would be kind of interesting. But finishing our video, I was saying in summary and the final advice, prop firms offer great potential by providing substantial trading capital. Remember, choose wisely, focus on reputable firms with fair rules, and diligently avoid scams. That's why on my end, I only recommend FTMO. And if there are some US citizens here that are wondering, well, yeah, but they don't allow US citizens, it's not an issue with us. We have a way to bypass that. So like I've mentioned, if you're interested, just check the links in the description. So trading through a prop firm is indeed a fantastic opportunity, but it's not easy money. Success requires discipline, proper risk management, and realistic expectations. So now I'd love to hear from you. Have you already tried a prop firm challenge on your side? Share your experiences below. I'm curious about your journey. If you want to know more about how to make consistent revenues thanks to prop firms, check the video right here. Don't forget to like and subscribe. Also, if you'd like reviews on specific prop firms or topics, let me know in the comments. Thanks for watching and see you the next time.